Friday, everyone. Thanks so much for tuning in to our work week wind down session. So I am Lori Randolph, as always, and we have
Michael Curtis with Movement Bank. And what a treat, I got Lori in person this time.
Yay! So we both happen to be in the same location at the same time. We're here in our South End office here at Costello Real Estate and Investments. If you haven't been by, come on by. We'll take you on a tour.
Mm-hmm. And if you don't know Miss Felicia, she's amazing. She's the front office lady here at the South End office, and she will treat you like family. She will take care of you. So just know that as well.
Absolutely, absolutely. So I was just so thrilled to see Michael, and I was like, Michael, hey, let's talk about what's going on. Mm-hmm. Let's talk about the market. Let's talk about our clients that are out there not really knowing what to expect or what they may qualify for. Mm-hmm. So tell us what's going on right now. What options do you have? What's coming up? Mm-hmm. And let's just give our viewers an update.
Yeah, absolutely. Gosh, I mean, what a week we've had. Lots of trainings, lots happening. Next week is a big week for the Fed. The Federal Reserve will be meeting yet again. The expectation is they're going to be hiking rates again. If you're not familiar, boo, right? I think the actual words that Jerome Powell used at the last meeting is that prepare for pain or something along those lines. Yeah. And gosh, thank you for that. That's what everyone wants to hear.
That's kind of like, me growing up. When I would get in trouble, it's like prepare for a whooping.
Here comes the whooping. It's coming. So trust me, there's a lot of mixed feelings about it. No matter where you fall on the spectrum politically, what they're trying to do is, in the best way that they know how, is to stamp out inflation, right? So that's the name of the game. The number one tool to do that is to raise rates. I think I've spoken about it before. Yeah. We went through a couple of years of stimulus, right? Like the economy got really hot, really fast with stimulus money being pumped into the economy, stimulus checks. So cash came just around, right? Like a lot of people were very cash heavy. Right. And now we're seeing an inverse of that. Like, whoa, we need to cool everything down because prices are shooting up. The real estate market that we saw, Lori, last year and the year before that was just crazy.
Yes.
I mean, adjective to use is crazy.
Bananas.
Yeah.
That's what I would say.
I mean, like, what were the offers looking like for you while you're out there?
Oh my gosh, the ones that were won or declined.
Well, any of them, just as a realtor,
I mean, so what I saw, it was all across the board, and it wasn't just here locally in Charlotte. It was on the outskirts of Gastonia and Concord, Harrisburg, even down in Clover, South Carolina. But I mean, we were going like 15, 20 over asking. Mm-hmm. And obviously we were trying to win out some of the competition. So we would do things like, put in a guarantee for the appraisal if it didn't appraise for that amount. So it all just depends on that specific buyer and if they have those extra funds to go in there and supply that. But it didn't always make the cut.
It's hard, and buyers are beat up. You think about it, interest rates were really low back then, and you think, well, then buyers can take advantage of that. However, what we're seeing is buyers were feeling discouraged. Inventory was low, multiple bid situations, like Lori's saying, multiple markets impacted. So even if you left like Mecklenburg County limits and you went out, you still saw the same kind of hot pockets of just competitiveness, really crazy offers on homes as well. What we're seeing now is as the Fed actually starts to raise rates, and rates have been in what I consider to be like a correction phase, right? Like this is artificial what the Fed is doing to help lower inflation. I'm actually seeing more and more opportunities for buyers. And in turn, for sellers as well. So we're seeing more equilibrium come into the market, and buyers are starting to pick up on that. big thing there, and this is something I've been preaching to folks, is that, don't get hung up on the interest rate. Interest rates are temporary.
Right.
It's temporary. It's a vehicle to get you into that permanent place, the property.
Right.
That is the investment vehicle. So the interest rate, whether it's 4%, 5%, 6%, that is temporary. You can refinance that down the road.
Right.
What you can't gain back is appreciation. So a house that is $400,000 today, oh gosh, Lori, I can't buy that house. Interest rate is 5.75%. It's just too expensive.
Right.
Well, if you wait, next year that house that was $400,000 is going to be $450, or $425, or $475, depending on the market.
Yeah.
And so you're gonna basically shoot yourself in one foot, thinking you're saving yourself with the other foot.
Right.
So just think of it that way. It's a vehicle, financing programs are a vehicle, and if you have a good lender, they, like me, what I'll be doing is calling my clients and explaining this to them, being their advisor, and when the market shifts back down, what we'll be able to do is then change that, right? We'll change the financing. We'll be able to refinance into lower terms, and now they get not only the appreciation they built over the time they've owned the home,
right,
but now they'll also get the lower payment as well, and many times knock out PMI.
Exactly. I honestly feel like I should have had some props with me today. Right? I wish I had my little bill, my server bill that says ring for wine.
Yeah.
I wanted to ring a bell because you hit the nail on the head when you said, you shouldn't focus as much on the interest, because you have that opportunity to refinance, once, the market corrects itself.
Mm-hmm.
But also another kind of tip or trick is, if you are in a position where you could ask for a reduction on the home, instead of asking for a reduction of the price, you could ask for that concession to actually buy down your rate.
Yep, so something exactly right. So another thing we've seen is with sellers, instead of just dropping the price, I've been showing sellers and buyers that, hey, if you drop the price by $10,000 or $15,000 on this house, it actually doesn't change the monthly payment.
Right.
However, if we instead keep the purchase price range the same, and we do a buy down, so the same $10,000 the seller was willing to put as a reduction, apply that to a buy down on the interest rate, we're now able to drop the payment even more with the higher purchase price of the home. So it's certainly something that I recommend. It's something that we're having those conversations as well.
Yeah.
One thing that we're really excited about as well, and something we're seeing a lot about, is off-market loan programs.
Yes.
Off-market.
Yes.
The greatest kept secret in real estate.
Yes. Give me more.
This is the stuff. This is the good stuff. So what we're seeing, right, is that we have the secondary markets. The Federal Reserve, they're tinkering, they're working under the hood of the economy, and interest rates on the secondary market, what's called on-market loan programs, is in flux, right? We're seeing it all over the place.
Right.
Well, there's a whole nother tier of options available to people. It's mid-tier banks. So mid-tier banks offering simple loans to individuals. And so basically all you have to do, and it's called off-market, so it's not impacted by what's happening by the Federal Reserve. What they're doing is saying, hey, if you meet our terms, we would love to give you a mortgage and just keep it on our books, keep it on our portfolio. Mid-tier banks want good performing debt. They want good performing mortgages that they can place onto the portfolio and receive good performing payments from individuals. So they'll say, hey, we'll sell you this house, or not sell this house, we'll finance this house for you, $400,000. Here's our down payment requirement. Here's what the monthly payment would be, and here's the terms. It's a simple mortgage, and then they'll keep it. They won't sell your mortgage. They won't change anything, and that's that. What's really powerful about these is these guys, because they have a hunger for building up their portfolio, their interest rates are a lot lower than what the on-market is because of all the tinkering happening. Right. So what we're seeing, for example, is interest rates for an on-market program right now, like a standard conventional, is in the high fives, while we have off-market loan programs in the mid-fours. Yes. Mid-fours. So obviously that could be hundreds of dollars in your monthly payment that you're saving with an off-market program. Yeah.
Yeah, I love it.
Huge advantage. A lot of buyers are
it.
starting to see that as a shelter during this kind of volatile.
And with those, what you're saying, if I'm understanding correctly, the note will not be sold off.
Won't be sold. It's held. You know, for example, I'm a broker, but my bank that I work for, they are really wanting to build their portfolio, and so they have those off-market programs. They're watching what's happening in the market, but they're not tied to the market.
Right.
So they're able to make their own simple terms. Excuse me. Morning allergies, excuse me. You gotta love it. Live TV, welcome guys. I'm snorting over you. But they're gonna give a simple mortgage. Here's the terms. They'll stay on the books with Movement Bank.
Yeah.
And again, powerful tool available to buyers as well.
Yeah. Well, I love it. I absolutely love it. Well, I mean, so look, I'm ready for my weekend to start. So we're not going to go a full 30 minutes today. We've got a jam-packed week. I even have more training later on after this broadcast. So we're going to go ahead and wrap things up. Any takeaways that you want to send?
Oh, gosh. Like I said earlier, I'm really excited for buyers right now.
Yeah.
More than ever, we're seeing that they're not getting punched over the head. Crazy offers need to be made. Sellers are being able to have a little more bandwidth as well. So what a great time as the weather cools down to start that process and be discouraged. So I'd reach out to Lori. Catch her this weekend. She'll take you out. She'll show you some great homes. I'm excited. I'm excited for what's to come.
Yeah. So I know that. So throughout the broadcast, down below, our contact information was moving. It's kind of moving fast. So we'll just say our information. Lori Randolph, GLAM Realty. You can reach me at 704-965-1702, or you can shoot me a text. And my website is glamrealtyhomes.com.
Michael Curtis, Movement Bank. My cell phone number is 803-389-5256. Text or call me is the fastest way to get hold of me.
Yep. All right. Well,
Thanks,
thank
Lori.
you so much. I appreciate it. I know. I really like this.
Yeah.
I think we've got something going on.
So.
All right. You guys comment. Let us know. Do you like this format or do you like the Zoom look?
Oh, gosh.
I know, right?
Tired of the Zoom
I
look.
think we are tired of the Zoom. All right, guys. You guys have a great weekend. All righty. Bye.